We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Here we have a cycle chart posted on the readtheticker.com blog around the end of January. And it shows a pretty good cycle that we expect some sort of bottoming action in the hui, or the gold stocks. Now, if you've been paying attention, Trump's getting a bit nervous about the 2020 election, and he's trying to make a favourable backdrop for his election. And as we know, in election years, everything's pretty much pumped up to keep the masses happy. Not so long ago, Trump's financial advisor Kudlow's called for a 50 basis interest rate cut. Trump even came out and mentioned the QE4, or quantitative easing I should say, rather than QE4. And recently there's comments about a China trade deal, but enforcement delayed, maybe years after the election. So a great deal now, lots of celebration, lots of pump up, but no enforcement or no action, or deal doesn't start for a couple of years. The same talk as with Mexico. Do a deal with Mexico, but they've got 1 year to sort themselves out. He's preparing the groundwork for a 2020 environment where everyone's happy, try to keep the stock market up, keep the money flowing, and thus maybe a bit of inflation and keep wages up. So here we see gold and silver, and obviously Bitcoin's already flown. The gold and silver are starting to warm up, and so is the relative metal stocks. So this cycle is still on the table to turn up probably in the second half of 2019 as we get confirmation of some of these policies coming through. So let's have a look at some of the action charts to see what's going on. Here we have the GDX, and let's look at some footprints of demand. We all see that big move up. That's a demand footprint. A minor demand footprint here. And here we have a bear trap. Smashes down, but as you can see with the volume, demand came in and pushed it back up within the range of the trading range. Okay. That is a spring type action. This is a monthly chart, by the way. Springs are pretty much going to a period of support. Demand comes in and pushes it back up. Lots of testing went on there. So those are pretty serious demand points. Obviously we've got a couple of supply points. Supply waves, and a minor supply wave here. Now this supply wave here was defeated by the demand point. Alright, demand wave here. So what's going to happen now? Obviously this market's a very cautious market. It's a market that can whipsaw you out. But now we're beginning to see more demand points than supply points. Right. Something interesting going on in silver. Looking at the SLV monthly chart. So if we draw a channel to show its original trend on the uptrend here, so we take the speed of advance here and try and get this accurate. I'm holding my finger down on the R key, clicking the mouse. There we go. Right. So here we had, this is what the original trend up, came down to test it, failed, came down here, settled. If it was going to continue, it would have gone up there, but it failed. It came down here, a bit of support there. On that second demand point there, it continued on. So what we're trying to find out, what happens if we extend it out a little bit longer. So if I do another channel, I'm just going to cheat. Another finger on the R key, click that button there. Another parallel channel. Oh great, didn't quite make it, I'll do another one. That's better. So here we have, okay, here's 2020, the vertical line there. Alright. That's the little window here. So silver has got to the second half of the year to sort out where it's going to meet the support channel and carry up, make advances. This here is based on the speed of advance and the time factor. Now when we draw the speed of advance here, the first channel out from that advance on the correction has a likelihood of continuing the advance based on the fundamentals of what took this channel up here. But unfortunately, the fundamentals failed. Price kept on breaking down. Now, this is the second channel out. So here's the first channel of the advance. Second one out allows a correction for trend continuation. It failed. Now we get more correction into the second channel out. Time is taking effect there, and as you can see, it didn't make any new lows. Found a little bit of support here. Now we're into third channel out from the major advance. Now we see that time is wearing down the supply, fundamentals are changing, and we may get a continuation of advance based on this third channel. So for example, the distance between here and here are time periods, right? I'm just doing these boxes of time, which are equal to the original advance of the boxes of time of here. So here's the original trend into the new ground. First period of time allows the correction to continue the original advance. It failed, too much supply. Another box of time. It failed, but we had a bit of a spurt up and short covering, position building. Right, that's some time correction there. Time is healing the trend, and as we get more time here, we're going to see a reaction in the second half of 2019 as people realise supply is not there and the demand fundamentals are taking charge. As I said before, we had a demand point here in the silver and gold stocks, and we'll probably get another demand point there in the second half of the year. That will be all consistent with the price and time action of this chart, and if it fails there, well, that's going to be pretty sad. Let's have another look at another chart. Right, so let's have a look at catch up with the Huey. So, right, if I draw the same channel down, take it from there. Okay. So this is the initial speed of the advance down. This is the trend. Okay. The first channel out is a correction with an expectation that price might go down and continue the trend. Right. As you see, that demand came in and stopped that. Hence we have a higher low. And as I expressed before, we've got a bear trap here. Demand point. So here's, I think 2020 is in the middle there. I've got 2020 is about there. We've got this window here, which is coming up to challenge this outer channel here, and this will be obviously very bullish. So in Wyckoff terms, we've seen demand points, bear trap, building up the creek. So we've got a creek above here, which is a type of imaginary trend line between here and there. Okay, so the bullish argument and the bullish footprints are building up, and based on time, I would say warming up into the second half of 2019, in line with the cycle, is still holding true. That's for the Huey. Have a quick look at gold. Gold. Now, these are all monthly charts, by the way. I didn't mention that. The first thing we note about gold is I just do a little basic retracement. Look at that, 50%. Any long-term bull market, that is good going. So we've got a 50% pullback there. I go here, oops. Hold down the Q key. So there we see like it got down to 76, but really hold it at 66. So that's another bullish. So you got higher lows, right? 50%. A lot of the footprints around here showing demand is present, slowly accumulating. Let's look at the speed of trend throw channels. Okay, draw this correctly, holding down the R key. Now you sorry, let's just highlight that. You can hold down the R key and draw some channels. Now if you want midlines, you hold down the C key and draw the same channel with midlines for more sensitive analysis. I'm just going to use the R key. My dots, trying to get my dots accurate. How's that? That looks pretty good. And there. Pull up here, I think. It wasn't very accurate. I'll try again. Please don't drink when you're doing this. Oh, that's better. Boom. Okay, that's a bit better, isn't it? Now what I try to find when drawing channels, I want to see the best fit. So I want to draw a channel where I see that support and resistance are obeying the channel lines. If you're drawing channel lines and there's no obeying, there's no adhering to the support and resistance of the channel lines, keep on drawing with different support points until you get more conformity. So here we have our initial trend down. As you can see, the red line is finding plenty of support there. We have our demand point there has been expressed. It stops at the upper channel. We get a breakout. Now, as I said before, this is the initial channel down. We get a correction, and this is the expected trend to continue down, right? Because this is just a correction and it goes into another time frame, but it's slowing down and expected to go down. If it fails to go down, that is obviously showing that the demand points are having more weight than the supply points, and thus demand is in the house. Whoops, wrong one. Hold down the D key to draw a red one, hold down the U key to draw an up one. So gold is a bit of a laggard, but as you can see here, if it breaks this channel, breaks that channel point there, that is obviously a breakout, horizontal line. Okay. As I said, with the fundamentals changing and the talk of easy money and the fact that the Fed is supposedly halting QT in September, and just to put on the Fed has also talked about reducing the interest rate increases and only to have one. Excuse me, only have the one next year. They've done all this dovish talk, but they haven't actually done anything yet. The dovish action is expected to continue. Expected to happen the second half of the year, and I guess the markets are waiting for confirmation that the dovish talk is going to happen with the dovish action, and that's when prices will react at the last minute. So you can expect a bit more sideways stuff as it goes on, and see how Trump plays around with the dollar. Keep that down. So all in all, the picture is building nicely for the upward cycle on gold stocks and metal stocks, along with the price of silver and price of gold to advance as it builds into the second half of the year. Now, that was saying that is that one of the Livermore statements is that you want the price action to confirm your opinion before you act. So let's give it some time, but be aware that everything's progressing quite nicely. It's building up, and as you can see with the bear trap here that's going on in the other charts, that demand is very much in the house. Thanks very much for watching.